Cool. Oh yeah, brilliant. So hi everyone. I'm sure you all know who I am, but I'm Garrick Hedges, Managing Director of Hong Kong UK Support. So we help Hong Kong people with all parts of their life when relocating to the UK, including planning, including helping to find their personal properties for renting or buying, helping people with investing in the UK, be that investing in property in the UK, as we're talking about today, and also with helping with their careers, business, learning more about the UK and the UK culture, and helping children to settle into schools. So really all things related to UK life and having a great start when you first move to the UK. So today we're here with Michelle Grant, Investment Director at Grant Properties. They're our key property investment partner, and she's going to be delivering a presentation around UK property investment. So I'll pass over to her now to begin.
Thank you very much, Garrick, and good evening, everyone. I'm joining you from a rather cold Edinburgh today. I'm sure the weather's a bit nicer where you guys are. First of all, I'd like to thank you for joining me today, and for Garrick for giving me the opportunity to talk to you about how to access high-performing UK residential property. As Garrick mentions, my name is Michelle Grant. I'm Investment Director at Grant Property, and I've been helping clients invest in the UK and grow their portfolios for the last 19 years. So we're going to start this morning's webinar by talking through a short presentation that will give you an insight into the UK buy-to-let market, highlight some key trends, and talk about the effects of COVID-19. We'll then finish the session by discussing a few questions that have been submitted prior to the webinar. But as we go through, please feel free just to pop anything down in the chat box, and we can also cover off those too. So without further ado, I will share my screen with you, and we can talk through some slides. Okay, hopefully everyone can see those now. So UK property investment, how to access high-performing UK residential property. There's a few things we're going to cover off this evening. First of all is what we do and why we do it. Next, we'll come on to the different investment options that you may have been considering. We'll look at some case studies, and then we'll come on to the fun part. So please stay tuned until then. So what we do on behalf of clients is everything from start to finish. So we physically source the property on your behalf. We then renovate it, we furnish it, and then we also do the ongoing property management. And those are the things that really make us unique as a business. The fact that we offer that one-stop shop solution. In addition to that, we cover 10 cities throughout the UK, so both in Scotland and in England. And over the last 23 years, we've actually helped clients invest in over 2,500 properties. So we absolutely know the market very well. And as a business, clients actually help us grow. So happy clients buy again and also refer their friends. So one of the most important things we do as a business is really understand our tenants and how we can help meet their needs. So tenants tend to be looking for properties in a great location. They want properties that are in a very good condition. They want to make sure that they're safe and affordable to rent, and that they also have low energy costs. So for that reason, we've been cutting our CO2 emissions since 2006, and to date, we've cut them by 30%. In addition to that, they want to work with a company that provides good service and also efficient repairs. So on the client side, what we do is we only buy properties in prime city centre locations. We then renovate every property to a really high standard. We put in those safety features and we make them energy efficient. And to that end, we're helping clients by focusing on these very low risk properties. And as that one-stop shop solution, we're fully accountable at every step of the investment process. And at the end of the day, our buying power will save you time and money, which is really key. So tenants refer their friends, which helps your occupancy, and also investors refer, which helps us grow as a business. So let's have a look at the different investment options that you may have been considering. First of all, you may think, okay, what type of tenant should I rent to in the UK? Now, this pie chart is the UK as a whole, and you can see there that the student market make up the biggest percentage of that at 45%. And for that reason, that's actually the biggest rental market that we focus on. So the student market is big and there's growing rental demand in that sector. Students are not very price sensitive. It actually tends to be bank of mum and dad that cover the rent on their behalf. And we see them as very low risk. And what we mean by that is that every tenancy agreement will be joint and severally liable. And that basically means that every tenant in that property, so say you have 3 students, for instance, is fully responsible for the total rent payment each month. So we don't rent out room by room. So you'll have 3 students responsible for the full rent. And in addition to that, 3 guarantors, usually their parents, they're also responsible for that full rental payment each month. So actually you've got 6 people to chase for your rent each month rather than 3. So that's one of the most important reasons that the student market is actually a very secure market to rent to. In addition to that, we also rent to the young professional market. It's also a good market, though it's a bit smaller and we don't have any guarantors. The corporate market is good, but very small. I would actually probably say less than even 5%. Family is another good, strong market that you could consider renting to, though they will pay much less rent than students. And the social DSS market we view as very high risk. So that's actually not a market that we cover at all. So in summary, the student market and the young professional market are 2 areas where we would say to absolutely focus your efforts on. The next thing you may consider is whether to buy traditional properties or new build properties. I've been coming out to Hong Kong now for about 15 years with Grant Property, so I'm well aware of the amount of new build developments that are offered, especially on the investment side. But actually, over the last 23 years, we have never bought a new build property on behalf of our clients, and there's a good few reasons for that, which I'll cover off just now. So if we look at traditional properties, so older properties, they tend to be in prime city centre locations. New builds tend to be on the outskirts of city centres. In traditional buildings, the room sizes also tend to be much, much larger, whereas new builds, they can be very small because you've got a developer trying to squeeze as many units as they can into a very small space. And those are the 2 main reasons that traditional properties are actually much, much easier to rent than their new build counterparts. If we look at another few aspects, so rental increases in particular in traditional properties will be much higher because they're more in demand. And obviously the major benefit of buying a new build property is that you do have that lovely new fresh interior. So that is the main reason that we actually put that new build interior into an old traditional property. So you're getting the best of both worlds. If we look at a price point as well, new build properties are absolutely much more expensive by about 30% per square metre. And looking historically at capital growth, so value increases, then traditional properties again will be above market average, whereas their new build counterparts will definitely be below that. And one of the most important things in terms of security over assets is that during the financial crisis, none of our properties in the traditional space, our landlords didn't get into any financial difficulty when it came to lending, whereas new build property, there was a lot of bank repossessions in that space. And the expected lifespan of traditional properties, they've been around for 200 years and probably be around for another 200, whereas that can be very limited, again, in that new build sector. So all of these reasons really make looking at traditional properties a much better opportunity and historically have performed much better than their new build counterparts. So let's come on to cash or finance. Now that can be a bit of a maze, and we're here to help you through each stage of that process. So first of all, if we look at, should you buy purely in cash or should you take some lending out from a bank? Now, based on our last 23 years track record, if you were to buy purely in cash, then your return on investment would be about 11%. Conversely, if you were to get some lending from the bank, up to 75%, then your returns would be much, much higher, so up to 28%. So cash is still a good option at 11%, but obviously putting some lending in place and getting your returns up to 28% is a much better strategy. If we look at what your cash would buy you, we would say that clients would need at least £100,000 really to do business with us. And for every £100,000 you have, you could at least buy one property, one investment property. If you did want to go down the purely cash route, then you're talking around about 250 to 300,000 would really be your entry points. Okay, but as a rule of thumb, for every 100,000, you can at least buy one property. The other question may be, should you buy in your personal name or should you buy in a UK limited company structure? Now, previously, when I first started with Grant Property, 19 years ago, everyone used to buy in their personal names. Now, that has changed more recently, and most of our clients will use a limited company structure to purchase the property in, especially if their long-term goals is to build up a property portfolio. Two main reasons why clients will buy in that limited company structure. The first is that bank interest is deductible from your income. And secondly, they're very low cost and easy to set up. And actually the third one that a lot of clients don't understand or appreciate is that it can also be very good for inheritance tax planning going forward. Now, obviously everyone's personal situation is different, so we would absolutely advise you to take some tax advice on how to structure the property. But as I say, today, most of our clients will go down that limited company structure route if their aim is to build up a portfolio. So the short answer to that quite complicated maze is that 95% of our clients borrow some money from the bank, set up that UK limited company, and that will equal higher returns and as low tax as possible. So let's look at some case studies and what your money will buy you. Now, on the left-hand side of the screen, you'll be able to see the typical type of properties that we would buy in Scotland. So they tend to be flats, apartments, and they tend to be Georgian and Victorian in nature. On the right-hand side, you'll see now the more typical properties we would buy in England. So they tend to be Victorian worker homes and worker cottages. In terms of price points, our most expensive cities would be cities like Edinburgh, Glasgow and Bristol. And the less expensive cities would be Manchester, Birmingham, Nottingham and Dundee. So that gives you a rough idea of your entry levels in each of these cities. And to the right-hand side, this is really an example of all of the cities that we've operated in at some point during the last 23 years. We also put London on there purely as a frame of reference, just to give you some perspective on the different cities when we're looking at their overall population size, N values and student numbers, etc. So how do we physically do it? How do we buy in these prime areas? Well, the good news is that there's three people that will always be looking after your interests when it comes to your investments. So the first one is our property buyers. So we have a full-time property buyer based in every city that we operate in. And their job is to look at properties both on and off the market and assess which ones will work. We then have an independent surveyor who will look at each property and confirm both the current value of the property, but also the value of the property after renovations. So it's really important to understand those numbers up front to make sure it's worthwhile renovating the property. And then last but not least, you have an independent lawyer who'll be checking the title deeds on your behalf. So how we physically do it is our buyers will look at approximately 100 properties each week, both on and off the market. So you will get to see opportunities that you wouldn't necessarily be able to find yourself online. They then would visit 20 or 30 of those, and they put the property through an investment model that has been developed over the last 23 years. Out of that investment model, it'll tell us which properties we should be offering on, and we may offer on 10 if the numbers stack up. And then out of those 10, we may only win one. But what we do know is the one that we do win, we've absolutely paid the right price for it, and we know it's a great investment for our clients. So the aim of all of this is not to drag you through the pain of offering and doing due diligence on each property, and just to bring the property to you once we've secured it and once we've confirmed the renovation costs, the rent, etc., so you know exactly if the property is going to work for you or not. And there are supply shortages in the UK at the moment, which we'll come on to a bit later on. So how do we create a great property? Now, this is a typical floor plan of a property that we would look at in the likes of Edinburgh. What you have here is a very large lounge with a bay window. You have 1, 2, 3 bedrooms in the green, and you have a large dining kitchen, and you have a box room here, which is dead space in essence, it's not being used. And what we'll do is we'll create another bedroom in that kitchen area. So this bedroom converts into, this kitchen converts into a bedroom, and then we move the kitchen into that internal space. So we may keep that internal, or we may open it up to make an open plan kitchen lounge, just depending on what we can do from a planning perspective. In terms of renovations, we complete renovations very quickly. So we do renovations within 8 weeks. And we have an in-house project manager who's controlling everything from start to finish. So right through from the joiner, right through to the carpet fitter. Now, importantly, the benefits of renovating is that your rent will have risen because you've added another bedroom to the property. The value of the property will also have risen because the general condition will be brand new. And also your maintenance costs will be reduced, again, because the property is fully renovated. So all of these things really make it worthwhile renovating from day one. It's worth noting that you get the same guarantees buying one of our properties as you would buying a new build. So for instance, you'll have a 12-month warranty on all of our workmanship. And things like your boilers would have a 7-year warranty, your appliances, 2-year warranties, etc. So it really is trying to future-proof the property in terms of reducing costs going forward. And what we do in terms of renovation is really everything. So we call it going back to the brick. So it's fully rewiring, plumbing, central heating systems, new decor, carpets, etc. So you'll appreciate from these images that it really is a new build interior in a nice old traditional property. So let's have a look at the numbers in terms of a case study. If anyone is familiar with Edinburgh at all, you'll be aware that Marchmont Road is one of the most popular rental streets in the city, especially in the student market. Now, this particular property was purchased for £300,000. And our client spent just under £40,000 renovating it. The surveyor confirmed that the property was worth £300,000 on day one and would be worth £340,000 at the end of that renovation period. So confirmed that it was worthwhile doing the renovations. And really importantly, through that reconfiguration and remodelling, we managed to change the rent from £975 per month to £1,700 per month. So that's the main aim through that renovation process, is to get the overall return on investment as high as possible from the beginning. So that equates to a starting yield of 3.9 and then an end yield of 6%, which is an increase of 53%. Now, we increased our rents this year by 10%. So the yield on this particular property is now sitting at 12%. And that is an absolutely fantastic yield for a city like Edinburgh. Another thing we do for clients that makes us quite unique as a business is we do something called an annual health check. And what that entails is us looking at your investment on an annual basis to one, check the values on it. So hopefully we're going to give you a happy surprise in terms of your value increase. Secondly, can you buy more properties with no extra cash in? So is it possible to refinance that particular property or that portfolio if that's your aim? Next, we will also assess it to see if it's makeover time. So if you have owned the property maybe for 10 years, is it time to do a little bit of work to again increase the value and get more rent? And last but not least, we'll also look at any changes there have been to HMRC rules when it comes to tax, etc., and advise you best on how to get around those. So let's look at Brexit and COVID-19. Is there an opportunity in the UK market just now? So as I mentioned briefly earlier, there are still supply shortages in the UK. But despite that, our rents increased by 10% this year, and house prices do continue to rise. I think the latest stats out today were just over 3% that we've seen. So our verdict is that the shortage of supply in the market and very high demand is still driving house prices in the right direction. That couples with the stamp duty holiday that we're seeing at the moment is really pushing everything in the right direction. So is Brexit or COVID-19 an opportunity? We would say that some sellers are definitely holding off putting their properties in the market. Some are testing the markets and they may look at price reduction. And if we can, we will take advantage of that, obviously, on an individual basis. So we'd very much chat to the client and discuss the seller's circumstances and see if there's an opportunity to get a bit of discount. But supply shortages are a problem. So what we say to all clients is take some time out before you go live and be sure that you're ready. Because when you do decide to invest, things can move quite quickly. And when you are ready, we actually have an online platform called Applecross Investments. And that allows you to go on at any point in time and see the opportunities that are available, and also allows you to reserve your chosen properties. If you do want to reserve a property, then we take a £5,000 reservation fee. And all that does is allow us to say to the seller that we have a serious buyer in place and we know they're serious because they paid £5,000 deposit. That's fully refundable if the transaction doesn't go ahead or the seller withdraws, but it does help prevent gazumping in this market. So let's look at managing risks and how we help with that. Property is a time-intensive asset class, especially if you're sitting overseas. So our service is really geared to take care of every aspect of that. Property prices can fall, and they did fall during the financial crisis, and then they rose again, and at the same time rents were rising as well by about 10%. Interest rates could rise, but banks can offer fixed rates if that's something you're concerned about. And there are ever-increasing regulations in the UK when it comes to health and safety, but again, that's just something that we take care as a matter of course as a given. So property is low risk and very easy to understand. When we're looking at our track record in numbers, we're really happy to say that 8 out of every 10 properties that we renovate are rented before the renovations are complete. Now that's really key because what you want to make sure is that you're getting some income on the day those renovations are finished. Next, we work on average to 95% occupancy across our portfolio. I'm happy to say that today we're sitting at 98% occupancy, but as a general rule of thumb, it's 95. And we've got 0 bad debts, especially on our student properties. And that's because we have those guarantors in place to make sure the rent is paid. Rents have increased by about 10% this year, which we touched on. And overall returns can be up to 28% per annum. And they have been over the last 23 years. If you do like to play around with some spreadsheets, then I can share those with you to have a play around with them. And last but not least, and probably the bit we're most proud of, is that 98% of our clients would refer us to a friend or colleague. So if you are keen to chat to someone that's invested through Grant Property, then we can absolutely introduce you to one of our clients in Hong Kong to chat through their own personal experiences with us. So let's have a look at the fun bit in terms of bank selection. Again, this can be a bit of a maze, and some banks are still recovering from the financial crisis. Some key questions that we would advise asking any bank that you're planning to deal with. One is, do they lend to 3 to 5 bedroom properties? Well, some banks don't. Will they allow you to borrow to the renovated value? So borrowing your renovation costs really reduces the amount of cash that's required. So that can be a key question. And will they allow you to buy in a limited company structure? Because that will open up different tax efficiencies. Interest-only loan is a great option because that will also help preserve cash. And will they actually deliver? That's, I suppose, the most important question, because there's lots of banks out there that talk a good game and might have good headline rates, but do they actually come up with the goods at the end of the day? And last but not least, what are their rates and fees? These are obviously important, but they are tax deductible if you do buy in a limited company structure. So the short answer to all of that is putting some lending in place with that limited company structure will increase your returns and reduce your tax. So just to summarise, the UK residential market does combine low risk and high returns. Supply shortages in the UK are driving rents and prices, and traditional property has historically outperformed new builds. So I'll invite Garrick to come back on the call now as well, and we can perhaps just go through some questions.
Thank you very much, Michelle, for talking us through the presentation. And so, yeah, we had some questions from before, so we'll just go through those now. And the first one is, how much cash is needed to invest with you? Yeah. So
we've got it obviously there 100 British pounds if you are putting some lending in place. I think I mentioned previously that if you're wanting to buy purely in cash, then something around that 200 to 250 mark would be closer to the amount that you would need. What we often find, especially in a very buoyant market like this, is that clients will buy in cash first and then put some lending in as stage 2. So that just helps the transaction go a lot faster and helps them secure the property that they really want. But whether you're buying cash and then put lending in later, we'd always recommend putting lending in at some point really to increase your overall return on investment.
Great. And then do you always buy properties that need renovation, and would you recommend to always buy properties that need to be renovated?
Yes, we would say that that's absolutely the best model to follow. Our model is basically to buy properties in the best location, or buy the best property in the best location, but in a very bad condition. Because what that means is you're not overpaying for the property basically from day one, and it allows you to add value yourself through that renovation process. The most important angle when it comes to the renovation is not just to increase the capital value, but if you're increasing the number of bedrooms also at the same time, then you're getting your overall yield much, much higher than it would be just buying off the shelf, so to speak. So
right.
They're worthwhile doing that.
Right. So for sorry, just another question on another point on the previous question.
Yeah.
So when you're saying to add the bedroom, is that because you will focus on and kind of recommend to focus on the student market, where it's better to have more tenants or more people living in the property?
Yeah, that's exactly right. So basically, if we can obviously add more bedrooms, then that increases the overall yield in the property. I wouldn't say that that's just for the student market though. So quite often, for instance, we'll buy a very large 1-bedroom property and be able to convert it into 2 bedrooms. And properties of that size could just as easily be rented to the professional market as well. But generally anything 3 beds and above would be rented to students.
Oh, that's great. Yeah, thank you. And is it possible to get lending in a limited company structure? Because I think why this question has come up is because obviously when speaking to some lenders and some banks, they will tell people they can't borrow in the limited company structure, or they need to buy it in their personal name. And so what is your thoughts on that question?
Yeah, there are definitely companies out there that will allow you to buy in that limited company structure. And actually they're becoming more common now as the tax rules have changed. We use a broker in London called Vantage Finance, and they're very familiar with us and our business model. And they have direct access to perhaps some banks that normal kind of clients off the street, so to speak, wouldn't be able to access. There's also the element of working with us that a lot of lenders see as a very positive thing, and therefore they will lend to you because of that, especially if you don't have any experience in the UK. But they may not lend to you if you were to go to them directly trying to do something. So the benefit of working with us also, or the advantage of working with us is also on the lending side as well.
Right. Yeah, I think one challenge that people have found in the past is that when they go, say they go to a lender that will lend in a limited company structure, or they want to do a student-let property, which may be classed as a HMO, may not be, depending on the location. And then the lender will ask them about their experience or their track record or what investment or property they've done before. And they find that actually, because they have no experience, the lender doesn't want to take on the risk. So exactly, I think that makes a lot of sense, that if they're partnered with somebody experienced, they can actually have much better chance of finding a lending for these types of properties.
There's one particular lender that a lot of our clients use called Shawbrook Bank, and they absolutely fall into that category. So they wouldn't deal with you unless you're an experienced landlord, unless you're dealing with us, basically. So yeah, we plug that gap of giving them the confidence in our experience and our track record.
Great. And then I think something really important as well is, what can landlords do if tenants are not paying rent? Because I think in this year particularly, there have been more cases of tenants just deciding to stop paying their rent. So then it can cause issues of landlords being stuck. So what can people actually do in this situation?
Yeah, of course. I mentioned previously that all tenants are liable for the full rent payments and the type of leases that we produce. So the joint and several liability lease, which really does protect landlords in terms of the number of people that you can chase for your rent. So in a normal situation, we'd be obviously looking to the tenants first to pay the rent. If not, we'd be then looking to the guarantors. The next step would be, if there's any arrears in the property, would be to deduct any funds from a deposit that we hold up front. And normally any rent arrears are very small and they can be covered off in that kind of deposits situation. Worst case is that if the tenants are in 3 months of arrears, then we can start the eviction process. But I have to say that that's very rare. And I was having a chat to our accounts department just yesterday on that. And there, I mean, for instance, there's no one in the last 12 months that we've had to physically go down that process with, we're glad to say. So
that's very good.
I think because we're, again, in a very secure space, in that student space, then it's very rare for them just to stop paying, especially because of the guarantors in the background.
Yeah.
I suppose worthwhile touching on what did happen during COVID in the market on the tenant side. So what we absolutely saw was in March, when the government or the universities actually wrote to students, and their advice was at that point to go home. So a lot of students did vacate the properties, and our occupancy did drop slightly for about a 2-month period. What we found then very quickly was that tenants actually, and students in particular, started to come back to their properties after about 2 months. I think they got bored of living at home back with their parents, and the view was that they would rather be in the city that they're studying in even if they're doing virtual lessons, and still have that student experience rather than be sitting at home on a laptop really. So luckily for us, occupancy went back up, and as I mentioned, we're currently at 98%, which is exactly where we would expect to be this time of year. So
yeah, that's very good.
great.
So I just wanted to ask everyone on the call as well if people have any questions themselves. So any further questions that people have, just to put them into the chat box. So you can write the questions in Chinese or English. So feel free, just if you do have any questions at the moment, just to put them into the chat box so we can help answer those. So if you have any questions about the UK property market, or investing in property in the UK, or about the investment model that Michelle follows, just put them into the chat box. I'll give you a couple of minutes, and then we can answer those. Yeah. So Michelle, you can carry on, and we'll just wait and see if any questions.
Yeah, of course. Yeah, we'll wait and see if anything comes up there inside. Yeah, I mean, I suppose in terms of what's generally, you mentioned there, what's happening in the market just now. So after COVID, I think we have obviously a lot of pent up demand in the market in terms of people not being able to transact. So yeah, definitely a flurry when the market opened back up. We saw that kind of calm down a bit and go back to normal measures, which is good. Though there is still a shortage out there. So to give you an idea, we're bidding against probably 5 to 10 people for every property at the moment, and that's across all the cities that we're in. A major factor of that is absolutely that we only buy in these prime city centre areas, so that's why they're always going to be in demand. So a normal market for us is to have lots of competition.
All right. Oh, so we've got a couple of questions coming in, which is great. So on that point as well, which city have you found to be the most competitive over, really, since the stamp duty, since the stamp duty tax break was released, and since lockdown was eased? What city have you found to be most
actually, one of the most difficult cities for us to buy in has been Manchester, I'd have to say, since lockdown opened back. Manchester and Nottingham are two English ones, and I would say Edinburgh in Scotland have been the most difficult ones for us to buy in. So it might mean that we have smaller numbers coming through, but when they do come through, we still know that they're the right thing, basically. At the end of the day. That's
good. Yeah, I've also found Manchester in particular to be extremely competitive.
Yeah.
But yeah, Edinburgh as well. I have someone I know who does commercial property investment and in and around Edinburgh, and yes, even that's also been very competitive in kind of warehousing and kind of commercial spaces rather than retail, not as much, but very, very competitive. So it's interesting, isn't it, how very difficult year in many industries, but actually property has been very, very strong. So the first question we have in the chat box is, what is the range of the interest rate from the case of borrowing as a limited company as the owner? So if you're going to borrow as a limited company, what typically would the interest rate be?
So probably between about 4 to about 5.5% is the interest rate we're looking at just now. And that
4 to 5.
Yeah, about 4 to 5. Yeah, and that will allow you to borrow in that limited company structure. That will also open up the HMO market for you, and it will allow you to include the renovation costs in the mortgage as well. So we kind of tick those boxes. So that's
very good.
Yeah.
I think the key part in there as well for a lot of people is the fact that it can include the renovation costs.
Yes, yeah, absolutely. And you can do that at up to 75%. So same as you would be doing on the purchase price. So.
Right. Oh, very good. So just one. So the next question is, if I move to the UK, buy a house in the UK and continue to work for my Hong Kong employer remotely, would Ken be able to get a mortgage? So with the lenders, typically lend to somebody who's employed rent overseas and paid overseas, but located in the UK.
Okay. Yes, absolutely. The fact that you're living in the UK, and if you've bought a house in the UK, those things actually go in your favour. So you'd probably be even more attractive. So if you've got any lending history or any current mortgages or anything like that in the UK, then that absolutely kind of gives you brownie points for any lender. So it wouldn't be a problem at all.
Yeah, yeah. So I think that it's because it's possible to get a mortgage for a UK property, isn't it? Even if you're employed overseas and live overseas.
Yes, exactly.
So being in the UK as well is a extra bonus.
Benefits, yeah, bonus.
Yeah,
absolutely.
Yeah. And then we have one question here from Elsa, which we'll ask in just just a second. So again, with the mortgage lenders, obviously earlier you mentioned one in particular.
Mm-hmm.
So what's the main difference? What's the main difference you'll see between, because you mentioned a bank and then you also had the other lender that you mentioned before. What's the main difference you see between them? Is it more about customer service? Is it more about the products open, or is it the interest rates they offer? What?
Yeah, with the bank that I mentioned, Shawbrook Bank, now you can actually only access them through a broker called Vantage Finance, so you can't go direct to them.
Right.
But the main difference between Shawbrook and, for instance, banks like the audience may be more familiar with, so maybe people like Bank of China or HSBC, etc. HSBC and Bank of China tend to not want to lend in a limited company structure. They will only allow you to finance properties that have maximum of 2 bedrooms, so they won't allow you to do HMOs, and they allow you to include your renovation costs in your mortgage. So the headline rates of those type of banks may appear a lot less. I mean, sometimes 2.5%, 3.5%. But the benefits of using someone like Shawbrook, for instance, will be the limited company structure, the borrowing to the end value. The service is a really key part of that as well. So we know absolutely they will deliver within 6 to 8 weeks. We've had cases with other banks where it may take 3, 4, 5, maybe even 6 months, and at that point the property has been lost.
Yes.
The seller's going to wait around, so you might
they'll move on.
Yeah, they'll just move on. So absolutely, when it comes down to service, then that is key, especially in a market that's so buoyant just now. You have to be working with a lender that will deliver within the time that's agreed. So
great, thank you. So for Elsa, even though you've written the question in Chinese, we'll reply in English. But you can always, if you need more information, we can always follow up afterwards. But she's asked, does your company have a one-stop service from buying to renovating to finding tenants?
Yes, absolutely. So that is what we're here to do, is to help you at every stage of the investment process. But also in addition to that, also help you with the legal process and also that lending arm as well. So when you do decide which property you want to go with, we introduce you to a VIP team who will liaise with the lender and also the lawyer directly on your behalf, obviously with your permission. And they will take instructions from them and filter it through to you, basically just to save you the hassle of having to deal with lots of different people on that side as well.
So for Elsa, it's like being guided the whole way through the process for each stage, and making sure that everything is done properly and that you're protected and that you have good quality tenants in a good quality property with great returns.
Exactly.
Backed up by 20 plus years.
23 years.
23 years. And also if people through this process, people who have come through through art, like with us as well. If they do need some support with the language, then we can help there as well. So it shouldn't be a major concern for anyone, because we can make sure everything is clear for you. Great. So good. So yeah,
Thanks, Elsa.
Thank you, Elsa. So Teresa has asked, do you guys help with setting up a limited company as well, or do we need to do that prior to contacting you?
Yes, so we can help with that. So the way that you would do that is actually through the lawyer who will be helping you with the purchase. So again, when you've chosen the property, we introduce you to the lawyer and they will set up a limited company for you. It costs a few £100s to do it, and it's set up within 24 hours. So it's really very easy. The only thing you have to do is decide the name of your company. So that can be, that's the exciting part.
Yes.
What it wants to be called.
Yes. Oh, that's good. That's very good. I think the benefit of having the lawyer to set it up, and potentially also, like you mentioned before, is to have an accountant that you at least speak to at some point, is to ensure that it's all structured properly, to protect you and make sure it's structured for your goals. So depending on what your goals are, there's actually different ways to structure it to best match that. So again, if you need the kind of tax advisory as well, and that can be something else that we help with. And then the tax advisor and the lawyer can just make sure that everything is set up for you properly, so you can actually be best foundations for building your property portfolio, especially if you want to take advantage of the inheritance tax benefits that you get from doing it in this structure. So if you are thinking about the long term, then it is definitely a very good way of doing it. Yeah. Good. Great. So if there,
there you go.
Here we go. Oh, and Ken again. Thank you, Ken and Teresa. So Ken, if I verbally agree to buy a house for a certain price in London through an agent, can I ask for your help for all subsequent process from surveying to full renovation?
Unfortunately, we don't cover London, so we'd love to help Ken, but it's not an area that we have expertise in. And what I mean by that is in terms of knowledge of surveyors and contractors to do a renovation. So we're very much specific in terms of the cities that we operate in, because we know our teams there and we know we can deliver. So we'd love to, but unfortunately, we wouldn't be able to help with London, I'm afraid.
I see. Okay, great. So for London, so there may be I did put something about London in a message before, but that's fine. That's fine. Okay, great. So if it was in another city, for example, Manchester, how would you be able to help then if somebody's already agreed to buy a property? How could you help from that point?
Yeah, so we could absolutely help then with each stage of the process. So as you say, the surveying, the renovations, property management, absolutely we can step in and help at that point. What I would say is that if you're looking for properties yourself, then if they're good, then we're probably looking at exactly the same properties. What we say is if you're looking at something and you want a view on whether we think it's good or not, or if it's on our radar, then again, if you share those details with me, then happy to give your opinion on them. Because what you don't want to do is get into a bidding war. So I mean, us versus the client, and then you just push the price up. So we'd be quite happy, for instance, to step back if we think it's a good property. You offer for it in your name, and then we would step in and do the renovations, etc. So it's something that we definitely work together on if clients are looking themselves.
Yeah, that's a really, really good question. Because especially with the bidding war perspective, because in property or now a lot of people are also looking at investing in companies. When you get to the point where there are two or more buyers, it's very easy for the seller to play each other and try and push the price up. So like Michelle said, if you are looking at a property in like Manchester or Edinburgh or Nottingham as well, or Glasgow, and just share the details to make sure you're not going to kind of compete against yourself.
Yeah, exactly.
Or double up on the work.
And push the price up.
Yes. And then Teresa said she'd like to know more about the timeline as well. So suppose they reach out within the next week or so, is it likely they'll be able to complete the first purchase before the tax holiday ends? So I think the tax holiday ends 31st of March next year, so 4 months.
Yeah, that's right. To be honest, that's more than enough time. So if you're getting some lending in place, if you were to reach out next week and say we found a property for you next week, then the timeline from that date to purchase would be about 8 weeks, so about 2 months. So you absolutely be able to complete before the stamp duty holiday ends. A good point actually about buying, particularly this side of Christmas, is that quite often sellers or other buyers, should I say, are distracted with things like Christmas. So it's often a good opportunity to actually get a really good bargain.
Yeah.
So everyone's thinking about Christmas and shopping, whereas if you actually focus on the property side of things, then you'll find that there's less buyers in the market, basically. So our experienced investors will always buy at this time of year. Coming into the new year, people do have New Year's resolutions. They want to start focusing on investments and things like that. So the market again can get very busy, and we tend to see prices increase in the spring by about 10%. So absolutely buying in the next kind of couple of months is the right thing to do if you're looking to get a bargain.
I think that's such a good point. And I think for people who haven't lived in the UK before, may not realize how in December, especially the last few weeks of December, many people in the UK get into the Christmas spirit and the holiday mood, and then they slow down and they stop working so much and they stop thinking about investing or business or property, and then they just start to relax because the days are shorter, so people get tired more easily. And so for people who are ready to invest in property or any other type of investment, it's a very good time of year because there is just less competition.
Exactly.
And some sellers really want to sell before Christmas. They really want to get it done before Christmas, because especially now a lot of people have financial stress. So if they sell before Christmas, it's good for them personally. So they'll be more likely to
relax and enjoy their Christmas.
Relax and enjoy their Christmas. Yes, it's important for them. So hopefully that answers your question, Teresa. And Sally asked if you provide a service in Brighton.
Unfortunately not. So probably good to recap then on the cities that we do cover. So in Scotland, we cover Edinburgh, Glasgow, Stirling and Dundee. So those are the largest university towns. And in England, it's Nottingham, Manchester, Birmingham and Bristol. I would say though that Birmingham is probably slightly less on our radar just now because we've not seen the occupancy as good as we have done in the other cities. So our main focus is really Bristol, Nottingham and Manchester in England, I would say.
Bristol is an excellent city as well. I think it's talked about less, but it's a really brilliant city, especially for students. And the rental prices are quite high as well. So
they're really high. And Bristol's quite unique in the sense that the student market is absolutely fantastic, but also young professionals tend to rent in Bristol for a lot longer. So you could easily be renting a 4 or 5 bedroom house to professionals, maybe like in their late 20s, early 30s, just as much as you would rent it to students. So it's a really buoyant HMO sharer market.
Very spacious buildings in Bristol. A lot of older, big rooms, much nicer for people to live in as a shared property. And Avrid Lee, if you buy property in Northwest, such as Manchester, so Greater Manchester area, what services could you provide, and what would be the buying procedure?
Yeah, so if it was in Manchester specifically, not Warrington, but I'm talking about Manchester, the city centre, close to universities, we would do everything on their behalf. So we would help source, renovate, furnish, and manage. In terms of the buying procedure, what we do with each individual client is, if you are keen to work with us, is we sit down and have a Zoom call together and really get to the bottom of your strategy and your aims. And based on that, we would share properties with you that exactly match what you're trying to achieve. So it's very much a one-to-one consultancy service, and you only see properties that match basically what your aims are, as I mentioned, rather than sending lists and lists out of properties and say, choose anyone, because that's not the best way to do it. It has to match them with your long-term goals, basically. Properties.
Yeah. Very good. Yeah, thank you. So hopefully that answers your question, Avrid. And I think for anyone's questions, if they want more information, then they can speak to us more afterwards as well. Can guide you through that process. So just have another moment just to see if any other questions pop in. And other than that, is there anything you would like to... oh, here we go.
Oh, go on. Good.
Oh, hi, Vivian. So, oh yeah, really, do you want to go back to the slide where you talk about the property searching?
Yeah, of course.
So Vivian, actually earlier in the presentation, Michelle went through the process that they follow to find properties. So I'll let Michelle kind of show you that, so you can have a really clear picture of how that works and the benefit of that compared to just kind of searching yourself.
Sorry, just to go back a little. Didn't come up there. Here we go. Okay, so this is basically how we buy properties and how we find them. And I noticed that what's the difference obviously between us finding a property for you and you looking on something like Rightmove. Well, there's 3 people that are looking after your interests at each stage of the investment process. So we've got our full-time buyers based in every city that we operate in, and they will look on places like Rightmove, absolutely. They'll also look on multiple other websites. But in addition to that, they'll also have some off-market connections in the cities that they operate in. So you'll get to see much more scope and many more options than you would ever be able to find yourself online. Our buyers will also then instruct independent surveyors to confirm the current and renovated value of the property. And then in addition to that, you've got the independent lawyer who's checking the title deeds. It's very easy, I suppose, to look on something like Rightmove and say, okay, that one looks good, but then getting into a bidding process or bidding war is a slightly different situation. So our buyers will look at maybe 100 properties on and off the market online. They'll physically visit 20 or 30 of them, which obviously you probably don't have the benefit of doing being overseas. So properties can look very different online than looking at them in the flesh. And then we may offer on 10. Now, the buy-to-let model that it mentions there is another key aspect to the service that we provide, because what that will do is, 1, tell us how much we should be offering in the property. Secondly, tell us how much the renovations will cost. And thirdly, and really important one, is tell us how much rent we will get based on rents we're actually getting in that area already. So all of that in-depth expertise helps us assess things you might find on Rightmove to know if they actually will work or not. And we will only offer in the property exactly how much the buy-to-let model suggests that we should do, because we know that it's not worth a penny more. So even if that's £10,000 less than it's on at, we know those numbers up front. So if we win 1 out of those 10 that we offer on, then great. But what we're not here to do is just offer, for instance, just at valuation for the property, because that's what it's been advertised at. So all of these factors basically make it a much more in-depth process than just looking at something online and say, okay, well, that may or may not work. physically being there and having the surveyor and the damp report carried out and the roofer going out to check it. All of these parts make up a huge due diligence pack that we would share with you before deciding to go for any property. So it's all about not dragging you through the pain, basically, and just sharing the wins, as we put on there.
Thank you. Yeah, I think something to say with that as well is how anyone who has gone through this process themselves once or more times, you actually realize how many properties or potential investment properties on places like Rightmove are actually listed above or quite a way above what they're actually worth as an investment property. It's not really the same as buying your family home. If you're buying a family home and you love it, you'll pay whatever you can to get it. But if you're doing it as an investment property, you can only realistically pay the numbers that make sense. And quite often, the current landlords, if it's an investment property already, are business people. So they'll always try and put it at the highest price and argue the reasons. But if you just go by a kind of strict investment model, then you can make sure you just pay the right price rather than overpaying. Yeah,
exactly. I think it's very easy when looking at property specifically to have that emotional attachment, because that's normally but that's
it's exciting, isn't it?
It's exciting, yeah. And quite often you will say, okay, maybe an extra 10,000 just because you like it, but that's absolutely the wrong thing to do. So you have to look at it. You're never going to live in it. I mean, it's all about the numbers, and it's going to help you achieve your goals at the end of the day. So
if you do an extra 5,000 or 10,000 on the purchase price and then do the same on the renovation because you like tiles or other, then that could be an extra year to get your money back.
Exactly. Yeah. And especially on the renovation side, it's normally a lot more than that.
Yes. Yeah.
Get into the detail of what's required. So
okay. Yeah.